Everybody, welcome to the morning call. It's going to be a brief morning call because got off to a late start here. My apologies for that. Let's hop right into it here. Let's take a look at the S&Ps. Um, and what we can say here that we haven't already said, our uptrend firmly remains intact. That's not anything new in terms of news. This week, as we zoom in here, a little bit of a pullback here in the S&P 500. The last couple of days, we've seen some red. Doesn't surprise me. We've had a very, very large run. If we actually take a look at a higher time frame, we go up to a weekly chart. I think it paints a much better picture here. You can see just 10, 12 weeks here of nothing but upside. A little pullback here into this trend line here wouldn't be much of a surprise and really shouldn't catch anybody off guard. At this point, we all know this rally is a little long in the tooth. And in order for us to potentially leg higher, I think the market needs a rest. And that rest will come in the form of, a pullback or some, sideways, overlapping, choppy type of action. Back to the shorter term here, the daily chart. What can we say that we haven't already said? Losing support here of the 8-period MA, which isn't such a big deal. We still have this nice railroad track, rising moving averages. Until that really changes, there's really nothing else we can say. If we actually take a look at the spiders, which is really the more tradable ETF, slightly different looking. We saw a little bit of a basing action, for the better part of the last, week or so up here, and we gapped down yesterday below that base. Does that lead to some more selling? I think with another day or two, we that could potentially set up. There's not a lot of support in here in the spiders in the short term until you really come back to this level down here around 130, closer to the 134 mark, which is certainly a possibility. Again, this is a very, very extended rally, and you have to expect the pullbacks here to be maybe potentially a little more increased, as there's a lot of short sellers that are anxious to put some shorts on, and there's probably a lot of nervous longs up at these levels that are ready to just sort of pull the rug on any profits or momentary weakness that they see. So the market's at that place where you could see that that push-pull type of effect, where you have longs that are exiting the market, you have shorts trying to get involved with the market, you just have a lot of chaos. As I do think the market is primed for some sort of deeper correction here. Let's take a look, and I think that we're going to highlight that point. We're going to look at the transports, something we don't cover that much. But if you look here at the Dow transports, seeing some real selling yesterday. I don't know if anybody was taking a look there, but we hit that mark, that prior high. Some pretty aggressive selling yesterday in the transports, and I think you can see that highlighted in stocks like FedEx as an example. Nice little haircut there in FedEx yesterday, and some of the railroad names and some of the other bigger transports that I think people look at. So something to consider looking at. Again, let's go back to the transports. Still, relatively strong. No reason for panic here, but a very widely watched index, and I think you got to watch this level here going forward to see if it proves to be formidable resistance. And so far that that we tagged that prior high, and we sold off pretty aggressively there. So something definitely worth watching under the hood, if you will. Let's take a look, and I want to cover this just briefly at Apple, and we're going to look at what I call the risk on trade. Now, when you look at daily charts, you see the ebbs and flows, the day-to-day movement. You look at a stock like Apple, you're going to see a great uptrending stock. It's been very, very profitable for many, many people. It's been a great trading vehicle. I know we cover it extensively over here, and it's traded very widely on the virtual trading floor, amongst all the T3 Live contributors. A little tired here on the long side. The stock, made new highs yesterday, pushed through to about 610, and just, immediately from that point pulled back pretty aggressively. We'll look at a 15-minute chart. You can see that, flirting with 610, one of those trades where it's like a push-through failure, I think Scott always calls it, where, bases on the highs, breaks through to new highs, can't really get any momentum up here. And this is where you really see the momentum trade occur when you take out prior highs, and immediately, fails. We get that 3-bar bounce here into what are now declining averages on a 15-minute chart or a shorter term chart, and you can start to see how the stock begins to turn down. Saw that late day bounce yesterday. So we'll see what happens, but I do think looking at this stock on a weekly chart, as we look at this week, what do we see? Well, we see this candlestick that tells us there's indecision. It's been a really, really long run. The stock's run basically 200 points in the last, couple of weeks. So we look at, 8 or 9 weeks, we've run about 200 points. This stock needs a rest. The stock is tired. It needs a rest. It's going to be a back and forth trade until, these averages, which it's pretty far away from. Again, the further the separation, we talk about the rubber band, the further we separate off the band, usually that's when the snapback will occur. So keep your eye there. Another chart I want to look at here, again, just to put it into perspective, is a monthly of Apple. We look at the monthly. Obviously, if you're on the right side of this trade, this is a beautiful trade. But this is where the risk is essentially on. You don't want to be buying and chasing price up here at the highs. Look how far off the band we are. Apple has held its averages very, very well on a longer-term macro level for the better part of the last 3 years. And when it pulls away and, like I said, comes off that band and goes vertical up, there's a lot of money to be made in that, but you have to be aware that this is a time where the risk is on. You don't want to be initiating positions up here. You want to be initiating positions as stock either contracts over time or pulls back to these bands where your risk is much, much less than being a buyer over here. And I'm going to talk about that risk on trade because on the monthly chart, you're seeing a lot of this, vertical price action in some of these big, high-flying momentum stocks. Here's Priceline, here's CMG, ISRG, Lulu. These have been great, great trades for a lot of the active traders in this space. But you have to recognize when price goes vertical, sort of on that bigger picture chart, it's great and there's still opportunity, there's still money to be made. You can nibble with those tactical longs and those tactical shorts for 1 to 3 day types of trades. But be careful for the if your durations are longer than that, as when these things go vertical, the snapbacks and the pullbacks can be very, very ferocious. We've seen it many, many times before in my 15-year trading career. I've seen it many, many times. When something goes vertical, yes, there's lots of opportunity and it's great for the active traders, but you also have to be careful if you are somebody who's looking to put money to work for a bigger picture. So be very careful in there and some of those high flyers. Another one that jumped out on my scan was this Regeneron. Again, great trading vehicles, lots of opportunity on the short term. Be careful if your time horizons are longer than that, as that's where we can get into trouble. I'm going to wrap it up there. Again, it's a Friday. It's been a very, very choppy week, if you will. We'll go back to the spiders. We'll go back to that daily chart, and I'll just sort of end it there. Keep an eye on what price does here. It's now under this 8-period MA. If price is going to continue higher, I'd like to see it jump back above the 8, which is this blue line here. Recapture that 8. If it stays below this 8 and the 8 starts to turn down, it is a little bit of a warning sign here that we could see a deeper correction here and something potentially beginning. But right now, it's sort of hands off a little bit. Let the market sort of rest. Take a break. Don't force the trades at this level. Couple days. Part of this business is being patient. It's a huge part of this business. Letting things set up, letting things develop, so you can sort of evaluate the landscape and assess the risk. A little more time will be able to do that and give us a much clearer picture about what we want to do. As always, Plan Trader's a profitable trader. I'm Laz, filling in for the Red Dog today. He'll be back Monday. Have a great weekend, everybody, and I will talk to you shortly on the virtual trading floor. Take care.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.